Another Daily Market Report brought to you by Mike Bjork. Today is Hump Day, Hump Day, Hump Day. It's Wednesday, August 13th. Boy, summer's going by really quickly here. We got just a couple economic news we're going to go over today, and we'll start off the retail sales for the month of July. So this is an important indicator of where the economy is moving. So we had back in June a 0.2% growth, or in retail sales, and we figured the forecast remained the same. So this is basically a modest pace versus a large pace, but it came in at nil. So once you strip out the big ticket items like autos, we have the other number of retail sales excluding autos, and this one we had a 0.4% back in June, and the forecast for most being the same. It came again very disappointing at 0.1%. So not good numbers right here. Business inventories for the month of June. So May we had a 0.5% increase, a business increase in inventories in 0.5%, and the forecast for June came in at 0.3, and it came in a little bit higher, 0.4%. This is good news because this is showing that businesses are stocking up more because they anticipate doing more hiring and stuff, and this could be good more for like job numbers coming in. So good numbers for the business inventories. Retail sales came in very low. We'll take a look at next month to see what retail sales, because obviously August is typically a back to school time frame, and see if how much sales spike in August. Typically that's a big calendar year month for sales for back to school items. Uh, Headline news: stock market's up. The Dow so far up this morning, just over 80 points. So right now things are looking okay. They kind of shrugged off the obviously the retail sales. Geopolitical concerns really aren't on their minds today, and they're taking some of their tips off of some of the other stock markets like Amazon stock news out there. So that's kind of where they're kind of leaning towards. They see the economy kind of, one of the biggest concerns lately have been the concern that maybe the Fed may raise rates sooner than expected, and some of the stuff we're seeing like the retail sales basically showing us that no, maybe it's not heading into we're not growing more rapidly, and it's going to have to curb off, you know, curb raise rates sooner than expected. It's not going out so rapidly. It's more at a modest pace, and so this is kind of the reason why you're seeing the stock market going upwards and kind of shrugging off not so good news on the retail sales, because it kind of means long term that maybe the Fed won't raise those interest rates sooner. Let's go ahead and take a look at the bond market. And the bond market's actually doing quite healthy this morning too. So the bond market is up from where we left off yesterday. We were at 102.07, and we're kind of in the 102.17, 102.109 range and 102.17 range so far this morning. So it's been kind of going back and forth. So that means basically we got better pricing in terms for interest rates today. So good numbers today so far. We'll see if we stay in that range or if we can break above like we did a couple of days ago. But unfortunately it didn't stay up that far. But again, we've been kind of in that range before, and we'll see if it can break out one way or the other. Tomorrow we got the jobless claims coming in, and Friday we got some more important numbers coming in, like consumer sentiment and stuff. All right, have a great day. Thanks for watching, and we'll look forward to seeing you guys tomorrow.